Are you looking to build a corporate venture capital (CVC) fund? If so, there are a few things you need to know in order to be successful. CVC funds are a way for large companies to invest in smaller, high-growth businesses that they often don't have the time or resources to evaluate. They can provide an advantage when negotiating with these companies because the large company offers access to its resources and knowledge. There are a few things to keep in mind when building a CVC fund. First, it is important to identify high-growth businesses that can benefit from the large company's resources. Second, it is important to identify companies with strong management teams and a good track record of success. Finally, it is important to create a structure that allows the CVC fund to grow over time. When starting a corporate venture capital fund, it is important for you to define your fund's purpose, assemble the right team, find the right CVC fund, select the right partners, select the right manager, raise the right amount of capital, invest in the right companies. Some factors that could be considered include the size of the company and the stage of growth, industry, business model, and market opportunity. Additionally, it is important to check whether the company has any previous VC funding and what type of terms were offered. To read the full article, please visit the page https://malcolmtan.net/